Hi there, welcome to Kneppyinvests. With about a week left of September, which means this quarter is coming to a completion very soon, I do have to get my butt into gear here and try to finish off doing these group June quarterly report videos. I have about 5 or 6 to go, maybe even 7 to go. I only have one standalone video to do, that's on Buddy Technologies, but my goal was to do a video on every single company that did achieve an operational cash flow positive June quarter, and I want to achieve this goal before the very first Appendix 4C for the September quarter is released. So I do have to try to finish these videos. So I think in the next week and a half, 2 weeks, you should see a flurry of these June quarterly report group videos. In today's video, we'll be looking at 3 companies I really haven't looked at in the past, and another company which actually did a video on when they released their April quarter, March quarter Appendix 4C. So that would have been about 3 or 4 months ago. Now, the companies I'll be looking at today do include a coal mining company, a financial services company, another sort of diversified investing company, and the company I've already looked at in the past is Acumentis. This is a property valuation and advisory company. So let's get into it and look at the first company, which is Gullewa Limited, which is a very diversified company in what they do. Gullewa, if I am saying that right, ticker GUL, they are diversified, so they do obtain most of their revenue or receipts from royalties. They have a 1% royalty with Silver Lake Resources and their Deflector project, and so most of the receipts you see here is from that royalty stream from Silver Lake Resources. They also have mining exploration joint ventures and a few investments, in particularly property in the Maitland area, and they do also have equity stakes in other companies as well. Now, Gullewa has been listed since 1980, and they were founded in the 1950s, so this company has been around for a long time. And even though they've been around for a long time, they only have a market cap of $17.7 million. That's at a share price of 8.5 cents. You would prefer that market cap to be significantly higher since they have been around for about 60 or 70 years. Receipts to customers for the financial year, 3.6 million. Operating cash flow, 2.8 million. And they did lose a little bit of cash during the quarter, falling from 4.9 to 4.1. And the main reason behind that is because they made another investment of $1.8 million, which increases the amount of investments they do have to 7.3 million. When we look at their financial history going back to 2011, this is yearly data, and looking at revenue, cash flow from operations, and long-term investments, because this company does make investments. They've had a flurry of investments over the last 3 years, totaling about 12 or $13 million, and we have seen their revenue start to increase because of that royalty stream with Silver Lake Resources, up to $2.42 million in the last year, which ended 30th of June 2020. And cash flow from operating, they are operational cash flow positive also. So this company, even though it looks pretty ugly if you go back 10 years ago, these numbers are looking much better now, and we have seen that reflected in the share price action over the past 18 months or so. As we turn our attention to the weekly chart, this goes back to 2011, and that's sort of the same timeline as we were looking at the financials. And if you remember that financial history, from about 2011 to 2016, 17, maybe even after that, the financials weren't looking very good, and that's why the share price of this company fell from almost the mid-20s all the way down to a low of 1 cent, which was reached in 2015 and again in 2017-18. But ever since those lows, we have seen a share price go up. It started to increase slowly during 2018, 2019, but as soon as we went through the COVID-19 financial panic, we did see a massive spike, not only in volume, but also the share price of this company. In fact, the share price went from 3 cents to a high of 13 cents over about a 3 or 4 month period back in May to June last year. Share price has been going sideways since then, but we have seen a bit of a spike in volume during May and June of this year. it didn't really coincide with a breakout in the share price. I would like to see that. Whenever you see spikes in volume, I do prefer to see that with breakouts in share price. But the main story here is the share price has been increasing over the past few years, and I think the main reason behind that is we are seeing a bit of royalties come in because of that Silver Lake Resources. They are making investments, so they are putting some of that cash flow to use, investing in other companies. And if some of those investments pay off in the next few years, there is a good chance that this company's market valuation will increase from here. Second company I want to look at is Finexia. Now, this is a company I hadn't heard of before I looked at this Appendix 4C. And there are reasons behind that because this company has changed the name twice over the past 5 years. If we go back to 2016, they're actually called Bridge Global. Then in May 2016, they changed the name to Majority Capital with a ticker code MJC. And that's actually what I know this company by, because 1 year ago in September 2020, they then changed their name to Finexia. I'm not sure why, and I have no reason to try to find out why. And there is a reason behind that when we look at their chart. Ticker code for this company, FNX, Financial Services area. So they do advisory work, asset management, corporate and private lending, prime brokerage, and international equities. Listed in 2006, market cap only $11 million at 7 cents. Typically, you do have to check those share price often to see if that market cap does increase, because sometimes I prepare these videos possibly a week in advance and the share price will go up and down. Didn't really have to worry that with Finexia, and you'll know why when we look at the chart. Receipts for financial year 21, 3.9 million, operating cash flow positive 3.3 million, and they grew the cash on hand from 1.3 million to 3.8 million because they were operational cash flow positive for the June quarter by $2.9 million. Now on to the financial history for Finexia. Although they have changed the name a couple of times over the past 5 years, I did start following this company when they did change the name from Bridge Global to Majority Capital in May 2016. So the financial history in regards to cash receipts here goes all the way back to the June quarter of 2016. And to be honest with you, if you look at the cash receipts history between June 2016 and September 2020, nothing to get absolutely at all excited about. However, we have seen the receipts grow over the past 3 quarters. In fact, it's grown from $481,000 in that September quarter 2020 to current receipts of $1.3 million. So maybe this could be a reason to get a little bit excited about this company because they are starting to see the cash receipts grow. But there's another reason why I have completely no interest in this company moving forward. And it all comes back to the liquidity of trading in this company's shares. To really illustrate why I really have no interest in Finexia, I just wanted to look at the ComSec chart here for Finexia. So instead of looking trading view, I think ComSec charts really illustrates the liquidity problems this company is facing. And at times, you don't see much trading in this company's shares. In fact, if you go back to July this year, Finexia was only traded once. In August, it was only traded twice. And so far in September, it has only been traded 3 times. And when you get liquidity problems in a company's shares, you can see some violent movements in the share price on not much volume. And we saw that in April this year. In fact, the share price went down from 9 cents to 4.5 cents on very little volume, just because a few traders probably became a little bit impatient. And all you need is one trader who's a little bit impatient, and that can send the share price down 20, 30, or even 50% in 1 month. And that's one of the reasons I prefer to stay out of these sort of companies, because if for some reason you do need to sell the shares in a company, you might have to sell them at a massive discount. Now, on the flip side of that, because it is illiquidly traded, if some really good news comes out, that can lead to significant increases in the share price, because the amount of sellers that's completely dries up, and people who want to buy in have to raise up or increase their bids they put in. So sometimes it can be beneficial if you do have holdings in a company that are illiquidly traded. And the only benefits really occur when there is good financial news coming out from that company. Now on to the coal miner, MCM Mining with a ticker code MCM. This is not only a coal miner, this is also an exploration company as well. Now, just like many other people and many other investors, I am not a coal mining or coal bull. Just like many other investors, I am actually a coal bear over the long term. Now, even though I am a coal bear in the long term, in the shorter term, there are points where coal does become attractive because the negative sentiment around this industry will drive the share price and of the price of coal and the share price of coal miners down to ridiculous levels. We saw that a few years ago when everyone was death riding coal and it just became too attractive not to take a position in. But definitely coal miners are not attractive long-term investing propositions. It's all about the short term and just looking for the bounce. Now, MCM Mining listed on the ASX in 1980, and you might be asking where I get that information from. It's straight from the ASX website. So if they get that wrong, then there are problems moving forward, because you would think the premier site for that sort of information should be the ASX actual website. Markup of MCM Mining, $19 million at 13 cents. Cash receipts for the financial year 21, $22.8 million US dollars. Operating cash flow positive, I should say operational cash flow negative, $2.1 million. For the June quarter, they were operational cash flow positive by $121,000. So not a lot of cash flow in that quarter. So actually, that's one of the reasons I'm not that interested in this company, is simply because of the cash flow. And there is also a few other reasons as well. And we'll look at the charts and also their financial history. They also borrowed $1 million. And because they borrowed $1 million, they actually did increase their cash on hand from $2.3 to $3.2 million. One of the reasons I'm not that excited about MCM Mining, and there are quite a few, is just when you look at their financial history, this is looking at half-year increments going back to 2017. And this is focusing on revenue, cash flow from operations, and capital expenditure. Capital expenditure is in the green. The main thing here is we saw revenue increase to $151 million in 2019, and then started to fall back. So it's fallen from $151 million to $32 million in the most recent half year. Not only have we seen revenues drop off, the company is now operational cash flow negative by $11 million in the last half year. They aren't spending a lot on capital expenditure either only $260,000 in the last half year. A few years ago, they were spending upwards of $6 million or even $9 million in one half year on capital expenditure. So it seems like the company is or has stalled their capital expenditure spending, and maybe that's not a good thing because revenue is dropping. Now, I don't know a lot about this company. Maybe there are reasons behind that. Maybe they've got new mines, so they will be going into production. But when you do look at the chart, which I'll show you in the next slide, even the market's not that interested in this company. And this is the weekly chart for MC Mining going back to 2014. The share price has been dropping ever since then. You'll see some spikes in the share price. We've seen that 3 times. And we see the first spike in the share price, 2015. Share price went from about 50 cents all the way up to $2.50. A nice little return in a short period of time. So that's over about a 3 or 4 month period. And then we saw another spike in 2016. Share price went from 62 cents all the way up to $2. And another spike in share price in 2018-19 when the share price went from 37 cents to $1.25. But the general trend over the long term is down. So the tops of those spikes were always lower than the previous spike. Share price has been consolidating over the past almost 18 months, around about 12 to 25 cents. We're starting to see the moving averages come together. We've also started to see an increase in volume. So even though the share price isn't increasing, the market's all not that excited about this company because we haven't seen a breakout in the share price. Just an increase in volume is the only thing that is keeping me slightly interested in this company. I just want to see what happens with the share price over the next year because this increase in volume is a little bit intriguing. There's a possibility maybe they did some capital raisings to increase the shares on issue. That could explain why we've seen a jump up in volume over the past, say, 3 or 4 months. Final company we'll be looking at is Acumentis. I've already done a standalone video on this company just after they released their March quarter Appendix 4C. I'll leave a link, if I remember, in the description of this video to that particular video. Ticker code for Acumentis is ACU. This company is all about property valuation and advisory, listed on the ASX December 2003. Now, this is where it becomes interesting for this company, and I was thinking about doing a standalone video for Acumentis for these results, but because I've already done one in the March quarter, I thought I'd leave it this company in a group video. Now, market cap of only $24 million, that's at 14 cents. And the reason why that's attractive is when you look at the receipts for the financial year, 48.5 million. Now, receipts are growing at a slow rate, but it's the fact that they are operational cash flow positive, $4.1 million for the year and $1.9 million for the June quarter. So it looks like they are increasing net cash flow based off the most recent quarter. Not only that, they did have to pay GST, $1 million of GST for the last quarter. So this company is producing cash in the business. And if they can continue going down this road of generating cash in their business, that would mean a market cap of $24 million is low for this company. They finished the quarter with $3.7 million of cash, and they also repaid loans of $660,000. So they're repaying loans and increasing their cash at the same time. So there are some attractive things about this company. And there's also some other attractive things about this company when we look at the chart in a few slides. When it comes to the receipts history for Acumentis, we do have 2 years or 8 quarters of history here. And the main thing I want to see when I look at the receipts history for a company is an upwards trend. And there is an upwards trend here. It's grown from $8.7 million in the first quarter, September of 2019, to $14.5 million in the most recent quarter, which was also their record quarter, beating the $14 million we saw in the June quarter of 2020. There is a possibility that the June quarter could be the best quarter they do have, but a small sample size of only 8 quarters, we can't confirm that. And the only reason I say that is because the 2 best quarters have been the 2 June quarters. So it'll be very interesting to see what happens in the September quarter that they should be releasing in the next month and 1 week. So the good thing here is we do have an upwards trend in their receipts. So that's 1 tick when it comes to Acumentis. But again, there's another tick when it comes to this company, and that is when you look at the charts. Though I have hinted that one of the reasons I'm interested in Acumentis is their charts, but when you look at the share price action from the middle of 2017 to the middle of 2020, it was ugly for this company. In fact, the share price fell from just over 60 cents in the middle of 2017 to a low of 5 cents during the COVID-19 financial panic. We did see a bounce from that low of 5 cents to a little bit of a high, the most recent high of about 17 cents in November or late 2020. And the share price struggled to get higher than that for the next 9 months. But recently, in the last few months, we have seen a little bit of a breakout in the share price, or say a potential breakout in the share price. We've seen the 2 shorter-term moving averages, the 10 and 20-week moving average, move above the 50-week moving average. We've also seen the 50-week moving average starting to turn up. The last time we had seen the 50-week moving average moving up was way back in July, August of 2017. So this is all suggesting that the long-term downtrend that we have seen since 2017 has come to an end. And what I want to see now is a breakout to the share price, preferably on good news and on high volume. We have seen the share price test the high we saw back in November of 2020, and then it pulled back. So we need to see the share price get above that high in November 2020 before I'm confident that the share price has moved into an uptrend. That is all I have on this June quarterly report video, group video, for Acumentis, Gullewa, MCM Mining, and Finexia. If you have any questions about any of these 4 companies, please leave your comments, thoughts, and questions in the comment section of this video. Otherwise, I am not a professional advisor. or financial advisor, I should say. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.